Hello, I'm Nathaniel Eckert, and this is a video on registered accounts, and this is why open an RRSP. An RRSP is a vital component in Canadian retirement planning. RRSP offers many benefits to help fund the retirement you wish to live without worry and in prosperity. Studies on retirees have shown that the Canadian Pension Plan, Old Age Security, Guaranteed Income Supplement have not been enough to keep up with the ever-changing landscape and inflation. Tax advantages. Contributions to the RRSP reduce taxable income in the year that they are claimed. This advantage has a maximum of up to 18% of your previous year's gross income. Reducing taxable income reduces taxes paid and is a refundable tax credit. This credit can be carried forward. Tax deferral. The RRSP allows your assets to grow tax-free while sheltered in the account. Once withdrawals are made, the amount is seen as income for tax purposes. You are then charged at your marginal tax rate. Tax deferral has the expectation that the marginal tax rate you fall under during your retirement years will be lower than your prime earning year. Income splitting. In the RRSP, there is a provision where a spouse with more discretionary income can contribute to the RRSP of their significant other to attain a higher personal tax deduction. This is only one form of income splitting. Qualifying investments. Only qualified investments can be held in the RRSP. If an unqualified investment is held in the RRSP, a tax of 50% of the fair market value is levied. Qualifying investments include GICs, Canadian bonds, qualifying stocks, mutual funds, gold and silver bullion, and mortgages. This is a condensed list of qualifying investments. RRSP Home Buyers Plan. Once you have the savings in your RRSP, you have the option to withdraw a $35,000 interest-free loan for the purpose of purchasing or building your first home. You must be a first-time home buyer or a qualified home buyer. The loan comes with detailed payback provisions. Spousal bonus. There is a spousal bonus that with a spouse you can then withdraw twice the amount. It would be an extra $35,000, which makes the total $70,000. The First Home Savings Account. As of April 2023, there is a new account in the Canadian investment marketplace called the First Home Savings Account. This has similar provisions as the RRSP, however, its sole purpose is for purchasing your first home. This account alone or in combination with the RRSP can increase your savings for your home purchase. So as I said earlier in the video, contributions to the RRSP reduce taxable income up to 18% of your previous year's gross income. So I'll now explain the math behind that and how your tax credit is calculated. Alright, the income tax reduction calculation. The yearly maximum deduction for the upcoming year 2026 is $33,810. If your income is less than $188,000, the deduction is 18% of gross annual income. To explain it formulaically, this would be decimal 1/8 multiplied by your gross annual income. If that's less than or equal to 33,810, you use that value. So algebraically again, we just use that number as yearly max. Yearly max multiplied by the marginal tax rate would then equal the tax credit. Now, this is just an estimated tax credit. It doesn't take into account any other taxes. I am not a tax expert. So we'll then move into an example. This is just with previous year's gross income of $45,000. So simply decimal 1/8 multiplied by $45,000, 18% of $45,000. That is $8,100, which is clearly less than $33,810. So then 8,100 would be multiplied by the marginal tax rate in your province. I'm in Manitoba. The marginal tax rate for someone who makes $45,000 is 33.2%. So we then multiply 8,100 by decimal 332. We get an estimated tax credit of $2,689.20. Like I said earlier, this is just an estimated amount, and this does not take in the pension adjustment and or any other tax considerations. Just wanted to drop in a little thing about me. I am the head financial planner at Eckert Planning. I was born in St. Catharines, Ontario, and I moved to Winnipeg, Manitoba in 2008. I pursued higher education in 2020 and 2021 through some online resources and through Canadian Securities Institute, where I gained my certificate in financial services advice. I'm currently enrolled at the University of Manitoba, pursuing my 4-year degree, where next year I aim to declare my double major in statistics and economics. At the end of my 4-year degree, I will switch back to financial certification mode, where I will pursue my CFP, the Certified Financial Planner designation, through Financial Planning Canada. This requires that 4-year degree, and I believe as well 2 more subsequent tests of increasing difficulty. So that is me, and thanks for watching the video here, and appreciate a like, follow, and subscribe. Peace.